So welcome everyone, good day to a webinar with our dear friends from Forrester and Onfido. And with no further ado, I would love us to introduce ourselves. Kim, if you want to start, please.
Sure. I'm a senior consultant on the TEI team at Forrester. That stands for Total Economic Impact. And what we really do is to help technology companies share with their customers the benefits, quantified benefits that they can receive from their technology.
Thanks, Kim. And my name is Olli Krebs. I'm the Senior Vice President here at Onfido, in charge for the business in EMEA. Please to the next slide. Good. What is on our agenda today? So today is going to be discussing the economics of identity verification, and we are splitting in the middle, where I will take the first part to go through a few informations we gathered. We asked many questions on a few people and got some great information back. And then Kim will take over and going to talk about how the economics from hard numbers perspective, how customers of Onfido are experiencing benefits in qualifying. So having said that, the world has just been through a crash course in digital access. What do we mean by that? I mean, everyone around the globe felt this change of things. We rushed into the next generation, the next level of digitalization, because there was no chance of doing anything else. And that's where we are today. Physical interactions, people interactions were brought to zero. And we might face another time where we at least are not free to meet everyone we want. And this is, of course, not just in our private life, but even more though in the business life. Working from home is the new standard. Working digital is the new standard, right? And with that, also maybe on the next slide is, and what does it mean? And we asked a few people, as you can see, how do customers feel about going digital by default? It's again, it might stay the default because it's the new standard, as I said beforehand. So, and with that, we asked 5,000 people across the US, UK, France, Germany, Netherlands. What does that mean? And also, what came out of this? And also, physical experiences went down to zero or to a very low minimum. And together with Okta, we conducted some research and to find out how did the business establish the new way of working and the new way of interacting with people. And the next more important stuff is, what does that mean, right? Do you feel safe? Do you feel comfortable? And interestingly, as you can see here, 1 in 2 customers feel more comfortable accessing services online than they did before COVID. It looks like they just needed this little bit of a push to get to the digital age. And I think this is also not a generation thing anymore. We see people, young people making this quite easy. Older people finding it actually quite interesting as well. So really interesting. I'm quite sure even before COVID, myself included, liked the digital way either way because it's much more comfortable, much faster. In my personal opinion, much secure as well. But I leave it to Kim later on to talk about this one a little bit more maybe as well. But especially for a big group of people out there, this digital thing was completely new and they had to learn it within days, not weeks or years. And if we move over to the next slide, please. Another question we asked was, okay, look further to research here. We find 9%, so 9 out in 10 customers now feel comfortable accessing services online. So what does that mean? I mean, in the end of the day, half of them, which were normally using this stuff physical, now love to be online and accessing services online as well, where they thought beforehand that would never ever happen. And this is something which shows us that the last 2 years now, it's nearly 2 years actually, brought us 5-10 years in the future. And it shows that people taking this and they will not go back again because It makes things so much easier. Next slide, please. The next thing is, of course, the trust in brick and mortar is being replaced by trust in brand experience. And this is, I think, the most important thing we talk about, because digital is already a long time part of our whole life, is part of our whole business since many, many years already. And interestingly, it took a while for us to adapt, and we brought trust into brands, online brands, instead of the classical ways doing business in general. And the next thing for me is, of course, also the physical stuff has gone away, and this was, I think, the hardest part. Excuse me, to evolve to the next level, which will be online. And this trust transformation was pushed and was forced again by the last 2 years of COVID and the way how we had to work. Interestingly, 99% of the people we asked are still were surprised, because this transfer from the, let's say, the physical trust into the digital trust was much easier and much softer and much more flawless than expected. And with that, maybe in the next slide. And that's a very interesting one. 67% of customers want to be able to sign up for a new account online. 1 in 2 customers would rather open a bank account online. Can you imagine how this ratio was 2 years, 3 years ago? The ratio was a complete different ratio, and you need bigger numbers to even show the ratio. That's for the banks which already went into the digital life early, because they're normally quite fast and this kind of stuff. 6 in 10 would rather open a healthcare telemedicine account online. That's surprisingly high. Especially, I'm from Germany, so we like the standard way of doing things. But even here in Germany, the ratio is the same. They want to do things online because things are clear. There's nothing in between. There's no man in the middle. It is clear. And when the process is right, it feels safe again, because you are the master of where the data goes, as long as the trust on the other side is there. And 7 in 10 customers would rather set up a phone contract online, which actually is not really surprising, because the way how you do it since a long time was either way not in shops anymore, right? So, and we'll come exactly to why in a moment when we move over to the next slide, please.
Okay. You know, I just wanted to jump in. One thing that I think is really interesting about this, Olli, is that we saw this in the customers that we spoke to for the study as well, that people were not only interested in and willing to open accounts online, but they really were very demanding. I mean, they've had experience now of being able to do this well, and they, you know, are looking for a really good experience when they try to open whatever kind of account in the future. So that's something that customers really need to be able to step up to.
Yeah, absolutely right. And the interesting thing is, and we see this on this slide, as soon as the first fear is gone, expectations are really coming up big time. And we are in this business, and speed and security and turnaround time are the things we were talking the whole day. And it's rising and rising. It's quite interesting. So less than 10 minutes is the expectation tipping point today. Everything longer, where you normally waited for a bank account for a week to be open, it should be done today in 10 minutes or less. That's very interesting. But I think that's the human nature, where things, if they're there, they're expected, and they expect more, which is good. And again, 65% want to open a bank account in less than 10 minutes, the example I just gave. When I opened up my first bank account, which is a few years ago, I had to wait a week, right? And if you still want to have this good old feeling, you still can do it at banks nowadays, but that's not how you prefer. If you want to ask my son, 21 years old, he said, I want to do it online. I want immediate feedback. And if I don't get it, I go to the next app, because it's not the bank anymore, it's the app which decides, right? The next one, want to book a car, 72% want to book a car rental in less than 10 minutes. Same thing, right? Speed, but please make sure, I know security is a very important thing, but that shouldn't be any problem with speed or flawless process and everything else. 69% want to open a telecommunications account in less than 10 minutes. Of course, and by the way, the phone should be here within the 10 minutes, and I want to start not talking. Calling is, I think no one is using the phone as a phone anymore, but please, my WhatsApp and Instagram accounts should be ready loaded after 10 minutes as well. Next one is, of course, 69% want to open a phone contract in less than 10 minutes. Again, mobile phone, as I said beforehand, telecommunication when it comes to internet at home, all this kind of stuff should be in a heartbeat. 57% want to take out a new health insurance policy in less than 10 minutes. Again, this is something I personally believe that we are still struggling worldwide in getting this other stuff, which is outside of the already digitalized world, working. And I think the health insurance and all this kind of stuff is just slowly but surely coming. I think this will be very interesting, and I'm quite sure the expectations rising again. And last but not least, 59% want to take out a new automotive insurance policy in less than 10 minutes. Again, especially the last two ones are, I think, the old dinosaurs of a lot of paperwork going back and forth, all this kind of stuff. I personally believe if this is going in the right direction, that will make the life for many, many people out there much, much easier. To the next slide, Kim, please. So what is the next one? So 7 in 10 customers were blocked from accessing service in the past 12 months in some capacity because of lack of digital processes. That's a little bit of the dark side, and maybe not the dark side, but dusty side, let's call it this way, is that everyone was surprised by this boost for digital services, and they needed to be provided. And even though many people were already thinking about it, companies were thinking about bringing this to digital life, the processes were not ready for it. The business processes weren't ready for digitalization yet. And this is exactly what happened. As soon as you bring a printer in the middle of a digital process, it is not digital anymore. If you have the human factor coming in and need to recheck 6, 7 times, forget about the 10 minutes. So we are back on the point. But what we can see is, at least over the last 12 months, again, my personal opinion, observation here is the companies getting faster and faster, getting these things right, consolidating things and making the processes digital enough so they can industrialize now the onboarding of people, individuals, contracts, and everything else, and services, of course. To look close on how businesses view this, we conducted some additional research with 200 executives across a number of verticals, which we will show you on the next slide. And as I already talked about the consumer side, that let's say our personal and private expectations, business share the same concerns around experience. As I already said, we also conducted a research with 200 executives across multiple industries. 44% of these ladies and gentlemen we asked were concerned about the time to onboard. If you are not onboarding fast enough, there's the next competitor right around the corner, and you can rent a scooter quite fast from 6 different vendors. They are even parking at the same place. It's purely, okay, who can unlock me the scooter the fastest? Maybe one of the latest interesting examples I saw myself here in Hamburg, when you see a group of 10 people rushing to a place where scooters are parked. Quite interesting. And the other point is, of course, when you do something automatically, there are drop-off rates. And 25% of the people we asked had concerns around the high drop-off rate at onboarding nowadays. Again, as I said, we are still learning. And what we try to do in our digital experiences, we try to run before we could walk. And this is, now we are falling back on this one. And I think every company we are working with is our customers and partners are keeping up now and used, I think, the time a little bit also during the COVID times and lockdowns to really work on how processes can be built to keep customers in the right way. And it's sometimes just the way how you communicate and how you keep the customer in the flow, which is something we need to learn. going back to the whiteboard and finding the right way to keep customers happy during the onboarding process. Because, and I get it, but I'm telling you right now, I personally, as I'm working in this area, in this business, I rather wait 2 minutes longer in the sunshine, but I'm sure it's all secure and safe, and I can ride, or I can take the car, or my bank account can't be hacked or will be a fraud, part of a fraud ring attacking the bank. So I think it's an expectation management we need to do on both sides. That's also, and that's a great segue here to the fraud, of course, but also with regards to fraud, compliance, and process efficiency, 27% concerned with balancing the cost of fraud against cost prevention, and 25% concerned about accurate fraud detection. And last but not least, 23% concerned with the compliance issues. So this whole, all three things are things which are standing in the way of speed. It's always the point thing. You have the three things. You have cost, speed, and quality, and security, if you want to put it in the same way. And if you want to have the highest quality, you rather either have to pay a lot of money to get it done, or you take more time to get it done. So it's always a battle between the three pillars. And I think if the companies and the people and the services who will navigate this in the right way in the near future will be the ones who are attracting the most customers. So with that said, over to the next slide, please. Despite this, not many are actively looking at identity verification as a solution. 41% have an active identity verification initiative, which we like as Onfido because we're providing the services for it, and 59% do not. And the reason for this is quite simple. As long as it's not a regulated must, then you try to weigh cost and the outcome for it. I personally see more and more customers of ours going the path of wanting to have a strong identity verification and beyond, because there's more coming. It's not just the onboarding, but the overall life cycle. And again, I'm quite sure, Kim, you will talk about this one a little bit later. This will be balanced in the right way. And also the point is, I see this and asked as a more like an insurance, because as long as nothing happens, why should I pay for this? Unless something happens and you need the insurance, you're really happy that you paid for it. Nevertheless, this is exactly just, we wanted to show that there's still a balance to be discussed on the usage of things like this and not. Next slide, please. Let me just give you a short overview on Onfido and what we're doing. So Onfido is a document and biometric based approach to identity verification. A smart combination of advanced screening and fraud application signals will let you see people, not passwords. And even more important, what we want to go is we at Onfido believe that you should unlock your digital life with a smile. And with that, if we can move over to the next slide, please, just a few things how we do things. What we do is we verify your customer's legal ID. This can be nearly all over the world. The IDs are out there, will be processed in an automatic way. We will also want to make sure through a few techniques, video liveness, all this kind of stuff, your customer is real. You know your customer is real, and it's not a fake or a picture of a picture or anything else. And with that, we confirm that your customer is who they say they are. We will assure that Oliver Krebs in front of this screen is Oliver Krebs. And this is the beauty of a service like this. And also, if you maybe move to the next slide, Kim, please. 90% of the customers who had their identity verified by submitting a photo of their identity document would like to use this option again. And that's what I talked about earlier. It's not just for the onboarding side of the house, but in the end of the day, what we want is, and this is something, we want something which we can't forget at the table at home, like keys, like a fob or whatever. It should be always with us. And yes, a phone could be something like this. I'm quite sure my son will forget everything, but not the phone. However, you can lose it, and you lose, and I said this in earlier sessions already. For me, our phones are the new filofaxes. I'm not sure if everyone who's watching this is old enough to understand what a Filofax is, but this was, let's say, the phone in the, let's say, late 90s, early 2000s, where you had your credit cards and all your pins and everything in a little book, or bigger book belongs to. And this is exactly what the phone is today. If you lose it, everything is gone. I will never ever lose my face. I might lose sometimes my patience, but never my face. And that's the point where we think this in the right combination should unlock your digital life as well. And again, and the numbers clearly say 30 or 90% agree, or even 30% strongly agree, we would love to use this more and more. There are, of course, 2%, as always, people don't like this, which is absolutely fine. And I think it's there should be solutions for this people as well, who are disagreeing or even strongly disagree. On the next slide, please. And again, coming back to the COVID science and the whole digital life, 57% of customers report their use of biometrics has increased over the last 12 months. I'm quite sure would be even longer due to the fact we're just starting this off and kicking this off. And the biometrics is something which will help us more and more, because also when you do it in the right way, when you do it in an AI-based fashion, where machine helping us, we're also getting all the bias away when it comes to gender, when it comes to color of the skin and many other things, because that shouldn't be a blocker or shouldn't be anything standing in our way to unlock services. Next slide, please. And here we go. Customers find biometrics convenient and secure. 76.7% responded find biometrics convenient, and 82.8% respondents find biometrics secure. Again, there will be always mistakes. There will be always people out there who trying to manipulate all this kind of stuff. So it's always an uphill battle. But the security, this services, this techniques, and this has nothing to do just with Onfido. These techniques are all over the place and coming more and more, will secure in a life in a way where I personally believe it will unlock much more services much faster, in a much faster way. And with that, to the next slide, please. So this is now something where I'm more than happy to pass over to Kim now, because we want to talk about how does document and biometric identity verification impact businesses. And with that, thanks for listening to me, and over to you, Kim, please.
Great, thanks, Olli. So yeah, this is what we do, right? We try to go in and help customers, our customers, to really quantify the benefit of their technology for the folks who are using it. So just very quickly, to give you a sense of where I'm going to tell you a little bit about what total economic impact study is and how we do it, so that you understand where the numbers are coming from. And then I'll give a very quick overview of what we found, and then take you through the analysis and the financials a little bit. Just to start off, I want to say that the study that Olli referenced at the beginning of the webinar is available for download, and it really has a lot more information than what I'm going to be able to share with you in this short period of time. So I really encourage you to download it, take a look. It's got a lot of customer stories in there. There are a lot of anecdotes and quotes and things that really give you a sense, bring to life how businesses are using Onfido. And also there's very detailed financials in there, so you can walk through the way we quantified the benefits and take a look for yourself to make sure that you feel comfortable you're going to be able to receive those same kinds of benefits. You could insert some of your own numbers in there and kind of do the calculations for yourself. So what we do when we do a TEI study, again, is to try to go a little bit beyond the traditional ROI measure. We do measure ROI, so we're looking at the quantified benefits and the quantified costs, and then figuring out what is the return on that investment. But we're also doing a couple of other things, which is to apply a risk factor to each of the calculations that we do. So we want to make sure that when people are reading the study, they can feel confident that they're going to get that same kind of benefit. And, you know, certain use cases, certain benefits might vary more than others in terms of, you know, different businesses using them. So we apply that risk factor again to be conservative and to make people feel confident that they're going to be able to have these same kind of benefits. And the way we do the process really is to start off with a due diligence phase where we look at all of the materials that that the technology provider is putting out there, in Onfido in this case. We speak to folks on their side of the business and really understand from their point of view what the product is all about and what they think it provides for customers. And we also speak with the Forrester analysts on our side to understand what's going on in the space, what are, you know, customers looking for, and you know, and how is Onfido or the other service providers providing those for customers. And then we get into the heart of the study, which is really to speak to the customers that that are using Onfido. And you'll see we spoke with 5 different customers in this case, and we do an in-depth interview where we really try to get to what are the actual benefits that they get, what's the actual impact on their business. So we'll talk about things like increased revenue as a result of using the technology, or increased productivity, or lowered risk of fraud, all those kinds of things that we're putting numbers to. Then we take that information and we create what we call a composite organization. So we're not going to be sharing any of the individual numbers or financials from the customers who spoke to us. We use the information we get from them to create a financial model for this fictitious composite organization. And then we write the study about that, and that's what is available for you guys to download. So just to give you a really over top line view, and I think Olli did a great job, you know, sort of taking you through what's different about Onfido and how Onfido works. What we found when we spoke with customers is that one of the biggest issues they were dealing with before they deployed the technology was that balancing act that Olli was talking about, being able to balance the business's need for security and for being compliant with local regulations, which, by the way, vary from country to country. So, you know, that makes life a little more difficult for people. But to being able to balance that with their customers' demand for that fast account opening, that 10-minute you know, number that people were looking for. And in fact, most of the customers that we spoke with were trying to get that number well below 10 minutes. So it's, you know, customers are increasingly demanding that. What happened once they deployed Onfido was that they then felt like they had a turnkey solution that helped them to both speed up and improve their security. And again, we'll talk about the sort of financial impact of that for people. On a very top line basis, we saw a 261% return on investment for Onfido and in the customers that we spoke with. We'll talk a little bit about this composite organization in a second, but over the course of the 3 years that we modeled, this organization would have received almost $10 million in incremental net present value. And we also found then that that resulted in about a less than 6 months payback for the folks who invested in the Onfido technology. The 5 customers that we spoke to, you can see outlined here. Some of them were regional to EMEA, some of them were global, some of them were large, some of them were small. You can see there are some different focuses in terms of full service versus digital, some that were more you know, focused on insurance or more focused on trading. They tended to be, in this case, financial services customers. And that's partly because that's really sort of where Onfido was born. So these folks had the longest history of having used the technology and were able to dive deep for us and really give us great information on the use cases and how Onfido really impacted their business and their ability to serve their customers. But you know, as Olli was talking about before, this technology could be used any place that you want to, you know, be sure that you've got a secure identity verification. So it may be, you know, rental cars, it may be insurance, healthcare, could be a whole variety of use cases for folks. So what we found when we spoke with these customers was that they shared a lot of things. It's different as they were, whether they were global, whether they were insurance, or you know, whether they were digital native or not. They shared a lot of frustrations and difficulties in their business. First of all, was that they felt they were providing a suboptimal experience for their customers. They weren't able to consistently make that 10 minutes or less mark, to make the process smooth and easy for people who were trying to sign up for their business. They also were maintaining a large staff of people who were skilled at identity and document verification. So, you know, a very skilled staff that potentially could be used in other ways in the business, in a, you know, more useful fashion. And then finally, they were finding that they had losses from fraudulent activity, and they were having a difficult time complying with local KYC regulations. So as a result, they were out looking for a solution to this. They were looking for something that would provide that fast experience for their applicants, and not just fast, but engaging, something that would, you know, make it interesting and a little bit fun for folks who were trying to open an account. They wanted to verify the identity of the applicants at least as well as they were currently doing with the humans they were using, or whatever other process they were using at the time. And they wanted something that would not require, you know, additional tech platforms, people to monitor and administer, things like that. They wanted something that was turnkey, and that didn't require a lot of tech expertise on their side for that. The results that they saw then after they put Onfido in place were, first of all, that they were able to provide a really positive experience for their potential customers as they were opening accounts. It was fast, but it was also engaging and interesting for people. And as Olli was talking about before, you know, folks are feeling more and more comfortable with this whole process of doing things online. You know, that is something that really helped move this along. They also found that they had an improved security posture because they actually were able to do a better identification, better verification when they were having account openings. And they really had a plug and play operation. With Onfido, they were able to just sort of put it in place. It runs through their app, and, you know, nobody needs to spend time monitoring and administering. So just to give a quick just sort of overview, I think this quote really pulls together from one of the customers what it is that was at the core of their Onfido experience. People were impatient. They were dropping out of the process, and we'd never see them again. After we deployed Onfido, waiting times improved and drop-off decreased. So for this financial crime prevention manager at a bank, they really saw the results that they were looking for, right? They were able to get customers through that process quickly and easily. So after interviewing these customers, what we did was to create that composite organization I talked about. And so the organization that we used to model the financials is a $240 million annual revenue digital native bank, right? So this is it's a global bank with 12 million customers worldwide. Each of the customers has about a $2,000 average account balance. They have 1 million account opening starts per year in order to keep growing and to, you know, keep filling that pipeline of customers coming in to replace those who drop out. And they were experiencing double-digit annual growth. So again, this whole COVID experience, this whole fact that customers are now more willing to open accounts online, but also to continue doing business online. They're looking to be able to, do trading themselves and not necessarily have to call a broker and discuss it, right? They get online, they can do it. They want to be able to bank online themselves. They don't want to have to go into a branch and deal with people. So this is something that was driving really strong growth for this fictitious company. And when we put the numbers together for this composite organization, what we found is that over 3 years, they had a total risk-adjusted benefit of $13,635,817. So about $14 million. And that's a bottom line number. So that's a good chunk of change for a $240 million revenue bank, being able to add $14 million over the course of 3 years, which leads back to the 261% ROI we talked about. There were 3 key ways that these customers saw the benefit, experienced this calculus. The first was in being able to increase the number of accounts they captured. So they had a faster account opening process, they had fewer dropouts, and so those additional accounts dropped about $5.8 million over the course of the 3 years to the bottom line. The second way was that they were able to lower their exposure to application fraud. So again, they had better verification than what they had been using before, and that led to about $4.6 million less fraudulent activity for them. And then finally, they were able to improve the productivity of their onboarding process overall. So they freed up people on the onboarding team to either do less manual processes and handle more accounts per day or per hour, or to be able to work on other problems, other security needs for the organization, and spend their time in those places. That dropped about $3.3 million over the course of the 3 years to the company's bottom line. So I'll take you very quickly through how we came up with these numbers, just to give you a sense. And again, if you download the report, there's a lot more detail in there about how this was put together. But you can start to see how, if you look at your own business, you may feel that your customer lifetime value is higher or lower than $158. You may be experiencing a higher or lower abandonment rate than the composite organization we put together. So you can get a sense of whether your performance might be even better than what some of these folks experienced. But what we did was we assumed then that with this customer who has about a $2,000 account balance, their lifetime value was $158. We start with the account starts that we talked about before of $1 million plus per year. We saw about a 5-point decrease in the abandonment rate for these folks in the different customers we talked to. So that resulted in 50,000 incremental accounts opened per year because people were able to get through that process and didn't drop out. And those 50,000 accounts times the $158 lifetime value is $7.9 million. That's where that number comes from. Over the course of 3 years, $7.9 million. And then we add a 25% risk adjustment to this because, again, different businesses are going to have very different lengths of holding on to customers. A full service bank has a very different kind of stickiness to it than an online bank. So depending on your particular situation, you may see more or less value in terms of these specific numbers. So that's why we put the 25% risk adjustment on there. And so what we've said then is that at a 35% margin over the course of 3 years, this bank received $5.8 million of benefit from this one particular ability to open more accounts per start. The second was the better identification. right? Because they had stronger, more secure verification through the Onfido process, they actually had a lower rate of application fraud. So here we're looking at 600,000 accounts per year that are being opened. The industry average fraudulent application rate is 2%. And before Onfido, these customers would have detected about 75% of those fraudulent applications. With Onfido in place, they were detecting more than 95% of the fraudulent applications. So again, with each fraudulent account delivering, let's say, $900 in loss, the fact that they were able to cut that fraudulent application rate by 27% gave the bank a $4.6 million benefit over the course of the 3 years. And then finally, the third benefit was about automating the identification and really letting the onboarding team either process more accounts or work on other parts of the business that could return even better results. So the onboarding team of our $240 million composite bank was about 75 full-time employees. And they had an average salary, fully loaded, including benefits, et cetera, of $67,500. And because they were able to decrease the amount of time that they spent in onboarding, in identity verification phase of onboarding, the company was able to then redeploy $1.5 million worth of talent to other processes or to speeding up the number of accounts. And here, we have a slightly lower risk adjustment because this is something that's not as variable from one organization to another, right? You're starting with a manual team. They're going to be paid roughly the same across organizations, and we're really, we can be pretty confident that we're going to be able to save this kind of money, no matter what organization is deploying Onfido. So lower risk adjustment, we've got here a total 3-year benefit of $3.3 million. Additionally, as I talked about before, there are some benefits, really important benefits to a lot of companies that just are very difficult for customers to quantify. And we're not able to put numbers to them. So the first one of these for a lot of the customers that we spoke with was that they felt Onfido elevated their brand image, right? They were able to, particularly when they're talking to those younger, Olli's son, right, who is very used to having a great digital experience, who expects to be able to do things in a digital way and not have to interact manually or print things out or speak to people at a branch. The fact that these banks now, these customers, were able to offer that kind of high-tech experience to those customers really helped to make the bank, feel more tech forward. This was especially important to banks that were more full-service banks that had not been digitally born, and who were really looking to make sure that customers understood that they were, able to offer that service. But also, obviously, for any bank that was really all about being a digital bank, you need to be able to offer that full experience. You can't be, talk about being a digital bank or a digital trading company and then make people print out pieces of paper and download PDFs and things like that. So, so that elevated brand image was really important to the customers who were using Onfido. In addition, they found it much easier to move into new markets because Onfido is able to, verify documents, as Olli was talking, across the world. Right? They know what a U.S. driver's license is supposed to look like versus what a Belgian identity card is supposed to look like, etc. So all of that makes it easy for the bank to enter into new markets. And then finally, it's easier for the bank to stay compliant with all of the local regulations in the different countries they're in, because again, Onfido is up to speed with all of those. So whenever there's benefits, you know, there's always a cost, and the cost side of the situation here was really only one thing, and that is the subscription cost to use Onfido. There's also a very small sort of one-time cost, about a 20-hour developer's time to, you know, to do the initial API integration into the bank's application, but that is very small. Overall, the usage fees that we used in this calculation for this $240 million bank, which was having about 1 million identity checks per year, was a $3.8 million cost over the course of the 3 years for Onfido. And that's what we used then to go against the benefits we just talked about to develop the ROI. So that's a 261% ROI. Again, roughly $10 million net present value and a quick payback of 6 months. You can see the cash flow chart over here on the left that really shows, you know, there's almost no upfront investment as the business rolls out Onfido and makes more and more use of it. You know, the value begins to exceed the cost very quickly. So that is the total economic impact of Onfido. So I think we just wanted to end up with both Olli and I sharing with you what we think are the key takeaways for the folks who are listening to the webinar today.
Yeah, I think the key takeaways are clear, but I don't want to read them fully to you. But in the end of the day, number one, customers are happy and willing to access services online. I think we just need to think about ourselves. We are doing this. We're doing this every day, and it's getting better, easier every day. But there's, of course, a mismatch between digital process and their desire of access. And 7 in 10 customers block from accessing services. This is because we still are in the learning phase, in the development phase of our processes and techniques to get it done. And very important also to say is there are few regulative things out there per country or per region, which is stopping things like a clear digitalization as well. And sometimes, which is a surprise for every one of us, of course, our governments are a little bit slower than the normal world. But even here, I can see that there's the willingness for speed in getting things done, and I'm quite sure we will be there in a very short time. The third point, Onfido's document biometric identity verification can enable digital access in a way that meets business challenges and hopefully also the convenience of the people and everyone else out there who wants to unlock his digital life, as I said earlier. I don't want to bore you with another one on this one. And last but not least, Onfido can deliver real business value. And if you don't believe me as a salesperson in this call, Kim said it as well, so I'm quite sure this is maybe something which is underlining what we just discussed over the last hour here. Kim, anything to add from your side here?
No, I think that's a great summary. It's, you know, this is something that businesses and customers and their applicants are looking for, and clearly it's working for the folks that we spoke with. Yeah,
and last one is maybe one thing. This whole digital thing is not an option anymore. This is not if one or the other. It is there, and it will be more and more. So I think it is on us, the industry, and all the people out there to make it the best and securest way to get things done. With that, thank you so much, Kim, for joining me today in this webinar. Thank you out there for hopefully watching it and had got some interesting things out there. Of course, that was just the tip of the iceberg. If you want to know more, why don't you download the white paper, or why don't you come back to Kim and me and ask more questions, and we're more than happy to work with you together on this one. Thanks, everyone. Wish you a great time. Thanks, Kim.
Bye-bye.